India tends to lose only in the circumstances where India's tariffs are higher than the competing nations like China, Vietnam and Mexico, which is unlikely to be the case.
Right.
So as long as our tariffs are lower than some of these nations, we are okay.
So you don't see that buy on dip kind of attitude at all in the market.
This is very much like Ukraine 22. And I remember many people say, abhi to now the World War 3 hoga. Crude will go to $200 and all. So you extrapolate negativity at the peak of the negativity. So our manufacturing story is not over. It is not at all over. I mean, I have zero doubt on that, no matter what happens.
What are you betting on pharma?
CDMO is where IT was in mid-90s for India. Each one can have their own liking and dislike of a company, but we think, Laurus is one.
But what is changing this time?
Biosecure Act and ongoing tension post-COVID between China and US triggered that. Post-COVID, China plus one became real.
Hello and welcome to the Wealth Formula. The market has come a full circle after all the noise around Trump tariff and in fact looks to head higher. So clearly the risk related to Trump is something the market seems to have put behind. But then we are in the earnings season now, and that is far more important for stocks than all the noise that goes around in the markets. What to expect in this earnings season and how to navigate this shifting investment terrain as global trade realigns in the Trump regime. I have with me Vikas Khemani, founder and CIO of Carnelian Asset Management. So, Vikas, thank you so much for joining me on the Wealth Formula. It looks like the market has really put behind all the noise around the Trump tariff. What is your view? How do you see this earnings season panning out? Do you think this is going to define how the market moves forward from here?
So I think there is more than the quarterly earning right now. The defining moment is the ongoing environment of the tariff and all those things, because I think anything which comes out will be determined more by that environment. Even if a company declares a great outcome, I don't think markets will get really enthused because there are a lot of other uncertainties. Again, another thing I say that, monetary policy, we all know that the two big, two rate cuts have happened, liquidity surplus has happened, governor has spoken very well, still that has got ignored by the market, right? So I think right now, I think Q4 earning, there's nothing measures, in my opinion, expected also, but it's not going to be wash out either, because a lot of uncertainty only started in the month of April. So March quarter will be, in my opinion, all right. Generally speaking, it should be in line with expectation. I don't see any major disappointments coming out. I think Q1 we'll have to see, because Q1 is creating a lot of uncertainty, especially in the sector which are in the manufacturing, in trade. Because what happens is that when there's uncertainty, people tend to postpone purchases, prepone purchases, depending on their industry they operate in. So to that extent, some inventory losses might happen because of crude oil price going down and a lot of other stuff. So I think Q1 could be a little bit tentative, but I think right now market mood is more around understanding the tariff related sort of broader issue and implications of that. Once that settles down, I think market will get meaningful.
Okay, so you're saying the market has not fully digested the Trump news at all?
Now, as far as India is concerned, I think one thing market has understood after the initial knee-jerk reaction is that the whole ongoing saga is unlikely to be negative for India. If it is neutral to marginally positive to India. India tends to lose only in the circumstances where India's tariffs are higher than the competing nations like China, Vietnam and Mexico, which is unlikely to be the case.
Right.
So as long as our tariffs are lower than some of these nations, we are okay. And India is, I think, and another thing which is kind of more or less now settled is that there will be a lot of BTAs which will be done with most of the important nations, and USA will do that. And once that happens, again, markets will move out. So as far as India is concerned, India is relatively insulated, and once that fact was understood, I think, and coupled with the fact that RBI again gave a very strong guidance of growth. So I think, and inflation has come down. All those things are working well for markets. I mean, these are the things you would want. So I think, but having said that, you don't know what final situation will come out.
Right.
Because every day we wake up with a different kind of news. So that kind of potential risk uncertainty will still play out in people's mind till the time this issue settles.
So are there any pockets where you see particular risks with respect to Trump tariff?
I think as far as India is concerned, like I said, I don't see
from a
much
market point of view.
No, I don't think so. India perspective, I don't see major risk. But let's say tomorrow if something majorly develops vis-a-vis China, right? and if global trade gets disrupted, which again, low probability, I would say, I'm sure there'll be some solutions which will be found out. But then you can see a sentimental volatility in the market. If let's say US market opened 3-4% down, there's no way India can remain up. It might be 2% down.
Right.
So that's the kind of world we are in right now. When negative news come, it gets extrapolated, and which is what happens, right? So let's see. I think I'm sure in month of May and June would be, in my opinion, critical from seeing all these issues settling down. My sense is that this will be the period of volatility. But net, I think we will come out very well as a country in this crisis. I think markets are very healthy. I don't see. I mean, a lot of pockets of overvaluations have got corrected. Sectors like banking and all those things look very good, which will lead the rally. So, in my opinion, there could be a very good situation where somewhere this financial year, we could hit new high.
You think so?
Yeah,
The bottom is
absolutely.
behind us?
I think bottom is behind us. And I've been saying this even through the middle of the crisis, that unlikely.
And you're also saying, despite the fact that the risks are not completely clear from from a Trump perspective.
Correct. And even through the crisis, I was saying that unlikely that market will break 22,000 of Nifty, because that's where a lot of comfort comes. That's where a lot of valuations start playing on your side, and there's nothing broken on India story. Actually everything is in pink of health. All argument you could have made, you were expensive, which got corrected, right? Otherwise, I think corporate earnings, whether it'll grow 12% or 15%, that's the only argument you can make about. So I think India is kind of very sorted. So I am not at all worried on the big picture. I mean, there could be 1 or 2 months of volatility which nobody can play, and nobody can actually precisely tell you.
And what is your sense of sentiment on the street? Because a lot is also to do with, how the public perceives this. By public, I mean, the direct investors into equities, the retail public. Has this sort of correction damaged sentiment in any way, you think? Because you don't see that buy and dip kind of attitude at all in the markets, because whatever volatility you see in global markets is also getting percolated down to India.
No, absolutely. See what happens when something like this kind of fall happens from September last year, when market peaked out. And from there, markets have corrected 20%. And many stocks have corrected 40-50%.
Correct.
And like typical retail and psychology, a lot of money gets committed at the peak. Right? So, and especially retail direct investors get carried away by the ongoing fads. So you end up putting a lot of money at the peak in fads. And as a result of that, while market might be, only 23,500, I mean, small correction, but your portfolios are bleeding far more than markets. And that kind of puts the sentiments down for most of the people.
Right.
We've seen families, investors are cautious. They've seen the portfolio bleeding in last, especially, money which they deployed in last 6-8 months. So obviously it's not a good situation. It's not a pleasant situation. So those are the people who will be kind of holding back. But people who understand cycles, who have seen cycles, they are deploying money also. So like, of course, our monthly flow has slowed down, but we are still a very good positive number on a monthly basis through this crisis. Right. So it again really depends on the individual maturity of the investor, vintage in the market. People who've seen, like this is very much like Ukraine 22.
Right.
Nifty came down from 18,500 to 15,500, 20% correction. 21 was a great year, but 22 first half was a pathetic year, right? With 20% correction, a lot of fads that point in time, like chemicals and all those things, had corrected. And I remember many people say, "Abhi to now the World War III hoga, crude will go to $200 and all." So you extrapolate negativity at the peak of the negativity, and then that's where. So we wrote that time, I remember a note saying, build this vintage. Right. Because that vintage will really, so this vintage, according to me, will be again a great vintage to have for the reason that nothing wrong with the India story. India story continues to remain one of the best wealth creation story around the globe. Sure.
And I really do hope that comes true this year. But tell me, what are the triggers you see for a new high this year? It'll be led by earnings growth?
I think this year, because interest rates coming down has an impact. Both, I think, acceleration as well as the margins. So I think you will see, people will get surprised on, Q1 can be a little bit uncertain because of inventory losses and, ongoing preponement or postponement of orders. But that is not going to change banking. That's not going to change, many domestically focused sectors that might change a little bit of IT, that might change a little bit of manufacturing focus, especially export-oriented focus sector. But that's not changing anything, import-oriented sector. So I'm saying, so if you just take, that's only for Q1. But in my opinion, Q2 onwards, we will be into a good, robust earnings season.
Okay. And within earnings, of course, you're saying that banks will be good. Of course, in a lower interest rate environment, they should definitely do well. But do you see credit growth accelerating? Is there a good, strong growth story for banks?
Yes, credit has been growing. If you see, it started a little bit slow down with the nudge of RBI, which is a good thing. Because I believe that RBI should act as a counter-cyclical or measure, because when the unsecured loan was growing out of proportion, they had to give a nudge and slow it down. But otherwise, there's a reasonably good credit growth. MSME credit is growing very well. In fact, 20% plus, which is a segment you need. I think the segment which people talk about is on the corporate side. That why corporate credit growth or large corporate credit growth is not happening. That is because this time around corporate health is very good. Internal accruals are very good.
Right.
A lot of equity funding has happened. CapEx is actually driven by the equity funding than really debt funding. So that's the reason you are seeing a tepid corporate level growth. But that's again fine. As long as a lot of growth is coming through working capital requirement and all, it's fine. So corporate.
No, I'm asking also because, there is this fear that if there is a US recession, which is what some of the people are predicting, that there will be impact on global growth. There will be definitely impact on private capex at a global level, which will also keep, because of the second order, third order effects of tariff, if at all it plays out in the manner that the world is still not ready for, then you will see impact on private capex. In that sort of an environment, how do you size up banks?
No, so I think first of all, you cannot mix global growth with India growth. Like I repeat again saying, no matter what happens.
No, I'm saying this growth in corporate sector, which, people, any sector today, would the CEO would definitely want to see how am I growing. Is that delinked from the world, you think?
Yes, absolutely. Because India capex story is delinked to the world. Because I think it's largely driven by investment in India's investment cycle, in India infrastructure, India and Indian manufacturing capability getting built. Today, like I said, India tends to either neutral to positive the ongoing tariff scenario, whatever comes out. Because unlikely that India will be at a disadvantage as far as tariffs are concerned vis-a-vis China or any other competing nation. So India will be at an advantage. So our manufacturing story is not over. It is not at all over. I mean, I have zero doubt on that, no matter what happens. So even if global growth slows down.
If China, because of these high tariffs, if China, one of the theses, I'm just asking you this thesis that, overcapacities in China will finally get redirected away from US into other countries, and India could also become a dumping ground. What is your thesis around that? That the government will be aware of it, will put safeguards, that will protect our industries. Is that the...
See, it's not that China has not been trying to dump around. It's all, China does not only look at US as a dumping ground. China has been wanting to export. I mean, we still have a large deficit. But if you look at very smartly in the last 3-4 years, government has done many things. Especially using BIS, non-tariff barrier. Today, India used to import most of the footwear, but we don't do anymore because of BIS requirements. So government has used BIS on toys and on many things which India can manufacture. So by creating that environment, not only imports are reducing, but also capacities are getting created here. Now, this government is very smart. They know how to do it. And I mean, I think Minister Piyush Goyal was on the record saying that if you hear some dumping, please report to us. We will address it rightly, right? So in my opinion, and India is very clear what they are going to do. So China is not going to be able to dump just like, so I think India will... this government is very smart, like I said, in navigating some of these situations. I mean, I was in Chennai and I see around that there's a whole corridor where the footwear manufacturing is picking up big time for all the sports shoes manufacturing, which was historically not India's forte.
Correct.
But because of this whole BIS thing, now every large company is putting large scale manufacturing facility, and that is creating huge amount of employment. Like each factory employs 5,000, 10,000 people. Now that job is coming back home, which was getting export or which was in probably getting in China and all. So I think this thing is being done very well, smartly. So I don't think, if let's say China has always had overcapacity. They could have dumped earlier also. They were not able to dump not because of the capacity was short, but because of this kind of approach.
No, but earlier you have, I mean, in periods in the past, tiles industry, for example, even steel. I mean, many of these industries have suffered for 3, 4, 5 years because of dumping, right? I mean, there were safeguards, but then in an environment where you are, where this constant struggle between dumping and duty happens, industries tend to struggle. It's not a thriving environment for.
But again, I'm telling you, government is very proactive to that. If the steel, that time they did not provide protection to steel, that was a message to Indian steel industry. That because again, the government takes very consolidated approach. It's not that they are just deciding in isolation. They need to know how much domestic industry is sort of needs to be protected and not to be protected, right? Because ultimately, you should not have blatant protectionism by which your industry become inefficient. So it's a balance between, and which government has to balance.
But from a market perspective, even if you say that you shouldn't be earning so much, you should become competitive. From a market perspective, it will reflect on earnings, isn't it?
Possible. That's impossible. That's
so
quite
from
possible.
a stock market perspective, my question is twofold. From a stock market perspective, do you see any quarters where this could continue to weigh
Look, if there's a situation when government say I want opening everything blatantly to China without protection, possible. But like I'm saying, we have been observing government is saying about BIS they implemented even steel also. In many so BIS they've implemented by and large, right? So essentially they are taking a calibrated approach, how much to allow, what not to allow, protect domestic industry, because why would government not want to protect domestic industry in especially environment like this? So I do not see that as a risk, to be honest. But anything can change. How do I know? But if tomorrow global growth slows down, going back to the original question, if global growth slows down, I think India will gain market share. So we will have good enough growth, and hence Indian capex will not go out. In fact, there is another theory about the global capex. So today, we all know that the infrastructure globally is crumbling, whether it is US or Europe, right? And because of the funding constraint, they are not able to restart. So one theory which I think could be possible is today Trump is trying to reduce the fiscal deficit through DOGE and partly from tariff collection of the tax and all those things.
Correct.
So if you are able to, let's say, bring down your fiscal deficit to 3-4%, thereby creating a capacity of further interest rates cut. If interest rate cuts happen in US, that could pave the way for infrastructure rebuilding.
Yes.
Because in US cannot afford to have this kind of interest rate and start investing cycle.
Correct.
So in my opinion, whether it happens in 6 months, 12 months, 18 months, I have no idea. But I think global investment cycle will restart only when the Fed rate goes closer to probably 2-3% from so another 2% cut and all, you will start seeing acceleration there. That's my thesis. So, but it can very well be that it might take 2-3 quarters of pain before it starts. That's the journey. You can't. These are very big issues, so it takes time.
Right. So coming back to your top bets, you talked about banks. Is that your top bet?
Yeah.
In terms of sectors?
Yeah.
So what are your bets? Private sector banks?
Private sector banks,
speak,
NBFCs.
I think ICICI, HDFC, Kotak Bank, all of them hitting new highs now.
So banks will do well.
So the tide is turning for banks completely.
Yes, absolutely. So banks will do well. Last year banks did not do at all. So banks will do well. I have zero doubt in my mind. Across the board, including PSU banks, NBFCs will do well. So every investor has his own liking and disliking. Of course, we are private bank heavy. We are some large NBFC heavy. That will do well. We are quite overweight on pharma. We are quite overweight on CDMO as an opportunity. We are reasonably okay on auto components. So again, one can broadly look at these sectors, but then go back and you have to identify a company which you like and which can deliver earnings growth. So then you go back to those kind of things.
So tell me more about pharma. What are you betting on pharma? I saw Laurus Labs, Glaxo.
They are more CDMO plays. So Laurus and all we've been owning Laurus for now almost
for a long time.
For almost 1.5, 2 years.
Right.
We bought it around $300-$350. And our view is that CDMO is where IT was in mid-90s for India. So CDMO is next 10-15 years opportunity. Many large companies will come out of the sector. Each one can have their own liking and dislike of a company, but we think Laurus is one.
But why hasn't that happened? My pet question is that because CDMO is not an opportunity that we are seeing today. It was an opportunity we saw in 2000. There were lots of predictions that it'll see the same trajectory as IT, but it somehow didn't play out.
But the whole ongoing.
What is changing this time?
Biosecure Act and ongoing tension post-COVID between China and US triggered that. And I think there's a very much boardroom discussion. I think See, post-COVID, China plus one became real. See, India has been talking about manufacturing since 2014-15, ever since Mr. Modi came. But see, no matter how much you create supply, unless demand also gets created, it's very hard. COVID actually accelerated that demand. And many times when the demand is there, even if supply is not there, supply gets created. So today, the demand side has started becoming quite, sort of robust, quite like today when we talk to these companies, this is the kind of inquiries they are seeing, in last 2-3 years from all measures on the programs is unprecedented. The moment I see 100 inquiries versus 10 inquiries, my confidence in everything changes, right? Now, what is driving those inquiries? It is changing policies and strategies at the boardrooms of those global corporates, which were largely, outsourcing from China. And secondly, in this process also, India has built capabilities as well. It's not that these companies were not growing. They have built capabilities. They have built capacities. So now today it's also, easier for companies to say, oh, here's the capacity, we can look for it. So it's a chicken and egg, right? So this was a very nice confluence of time where there was demand coming in and part capacity was built. Still, we have a long way to go, by the way. It's like, think about it. It's just like IT. Earlier, it started with Y2K. It started getting demand, but Y2K is long gone. After that, we moved to ERP with cloud migration, digitization. A lot of things have happened. Today, IT is no more body shopping.
Correct.
So, in same way, in CDMO, we started with the body shopping, providing some scientists, doing some research, a little bit, But now they are going more towards partnering with the companies and all. So, it's a part of evaluation of any industry. And especially in pharma, one molecule takes 3 to 5 years to kind of even implement. It's a very different regulated sector. So, challenges for this is even higher. So, this does not come quickly, does not go back quickly. That's the beauty of it.
Okay, so what kind of growth do you see? And pharma has been a phenomenal performer last year. So, valuation-wise, is this a comfortable level?
It will remain expensive. Domestic pharma companies are not expensive according to me. But some of these CDMO equivalent players appear expensive. But thing is that in that, the reason why they also trade expensive because what number you take. Because in this, generally the growth is non-linear, right? I remember we used to own a company, we still own a company called Newland. In 3 quarters, the story changed. What used to look like 40p became 10p. Because 3 quarters number completely changed. So valuation needs to be looked in based on not only based on what is there right now, but what could potentially be there. And that assessment is needed by the analyst and investor that what is potential based on the program they have, management they have, capability they have. So that's the work we do, right? So same way, expensive looking at trailing earnings is yes, but expensive looking at based on what can happen is something what we need to assess.
But you still are a buyer. You are more like
very well.
You're buying in the pharma space.
Absolutely. We have a long way to go.
So all your incremental money goes into banks and pharma today.
Absolutely.
Okay. Anything that you have logged out of? You used to own some public sector banks, so that's completely out.
No,
now,
we still have.
story.
We still have. We have some. Look, I'm saying we still like them. There's no question on that, and they are good banks. So,
anything that you have turned wary of?
Very, I think,
Anything?
we've been avoiding all the, so-called fads, and we've not been invested in any of the, so-called new tech stocks, which are kind of positioned crazily, and also we avoided that. Of course, we, recently bought Paytm,
right?
Yeah, we recently bought. So, like I'm saying, when we understand, we'll buy Paytm.
Right.
So when we bought Paytm, I think about 550, 600 rupees, something around that levels. When we understood that, worst is behind, cash flow focus is coming in, franchise is of course very good. So then when we started understanding the
price was important.
Price, and more importantly, the business was more pivoting cash flow driven. It was
Right.
from cash burn to cash positive.
Flow. Right.
That matters.
Right.
We are not ones who believe in the companies who just want to only burn cash. The target is to burn cash, not to cash flow.
Right.
So we are not. I'm not saying they are smart people. We are not smart, but we want to focus on what we understand.
Right.
So we don't mind taking, provided we understand. We have not, so that part generally by and large, we have been kind of away.
How about the rest of the PSU bank, not the banks?
Again,
the
it's
defense
industry
space,
specific.
Defense, railways, power, all
power
of
looks
them.
good.
Which
In my opinion, other sector which we are very positive is in power, because see, India is staring at
utilities or transmission distribution.
Both.
What is it?
Both. So India is staring at electricity shortage according to me. See, more industrial use, more infrastructure development, data center, everything are power guzzlers, right? And India is not invested into anything in last 10, 15 years except renewable. Renewable is not something good for meeting peak demand. So you need to build thermal capacity. That's when you see even a nuclear side massive focus is happening. So power sector, not only in India but globally, according to me, is a very big. It needs to get rebuilt. So we have invested into EPC company which puts power transmission tower. We invested into companies like Bale. We have invested into. So we invested into a couple of a basket of companies which are leveraged towards the power sector.
Okay, as we speak, we have this news on Moneycontrol, which is an exclusive that, the government is looking at disinvestments for coal, RVNL, Garden Reach, and LIC. What is your take? For example, LIC, which has, of course, a lot of retail investors invested into the stock, it's been a bit of a disappointment, and more supply coming in this year. Good news, bad news. There are also analysts who say that it's great value. If you just look at conventional metrics, price to market cap to embedded value and stuff like that, but somehow doesn't seem very.
Yeah, so I think LIC, it's a very large market cap, very low floating stock, and unfortunately, the experience has not been so great post listing, and there's no institutional investor which has kind of taken anchor and lead in it.
Right.
It is in some sense.
Is it because of this fear of supply?
Not only fear of supply, supply is not as much a fear. I think probably it's a ability to convince to the investors that this is, well governed, well run, independent machine. Government, has let it go. It's not a strategic asset.
Why
of
would
government.
that be? Because I remember having this conversation on public sector banks, which, a lot of market participants believed that there was a real transformation happening, but why not LIC then?
So that confidence still,
Is
government lacking. Yeah? I mean, people have started investing to PSU banks. Today, look, institutional investor comfortably put money into SBI without worrying, right? But that has not happened
But
to LIC.
SBI was, in a sense, to be fair, was never looked at as a public sector entity. I mean, that was the only bank that,
No, I mean,
people who never invested in public sector banks also invested in SBI. So,
no, so, I mean, they also suffered at some point in time. But I mean, SBI, of course, was a great
Right.
flag bearer of, a great organization.
Right.
I have no doubt on that. Bank of Baroda. I mean, and they have been reformed also. LIC has not somehow got that, understanding, and maybe it's because of transparency, maybe because of, governance framework. Like, it has never excited me to go and explore that can that be value because ultimately, and plus also partly to do with the sector as well. See, today this sector also has a lot of regulatory headwind, and when your market share is so large, only thing you can happen is you lose. So so when everything is changing, value is not really value. So probably will be a challenge according to me.
okay, fair enough. Any other pocket that you're really bullish on, where you're putting your money now?
I think healthcare is something we still believe that pharma is one, but healthcare, the hospital, the diagnostics again can do very well. Within consumer, we are looking for companies which are slightly benefiting from the premiumization of the. So again, more company to company specific, and where companies are more agile, not in the large mainstream consumer FMCG companies, but companies which are attending to the rising per capita income, premiumization story. So those are so again pockets specifically. You look at the names, and that part continues to remain very, very positive.
There is, on consumer discretionaries particularly, there are very contrasting views in the market. I remember a conversation I had with Prashant Jain some time back, where he says that he doesn't believe consumer discretionary will see any accelerated growth despite the tax cuts that we've seen because of this wealth effect of what has happened in stock markets with respect to small cap, mid cap stocks, where a lot of retail shareholders have lost money. What is your take? There is another take which says that people will come back, and the tax savings that you see will trigger greater level of leverage, which can then be utilized to spend.
So I think we have to see everything in a context. See, there's no question about the demand will grow, whether it is because of interest rates or otherwise. Demand is growing. Take air conditioners. We are so underpenetrated. Take whatever consumer durable, we are underpenetrated. Demand is growing. The moment you buy a house, you need all those things. The question is, supply side. Today there's because it's a very large potential market, a lot of competition is coming to grab the land share, right? So because of the hyper competitive intensity in these companies, the profitability remains compromised. As a result of that, according to us, what our thesis has been that the kind of valuation they justify is not good. And hence it does not make a good risk reward of investment. You can play a cycle, you can play, depending on your short term trades and all, but if you look at, you need to get right pricing of the, if I
In
buy some,
discretionaries you're saying, or in staples you're saying?
in discretionary, staple anyway is a very different story, but I'm saying in
Right.
discretionary we were talking about. I mean, most of the companies are doing is 50, 60, 70 times
Right.
price to earning, and everybody's wanting to grab the land, right? So that's the reason it's creating hyper competitive environment. And more importantly, now because manufacturing has become easier, a lot of white label goods are also coming.
Correct.
Right? The retail chains are selling their own products.
Yeah.
Getting it manufactured, right? Now that of course is eating into somebody's market share. They are also giving competition to the main brands. The fact is that so
The moats are getting eroded.
there is a lot of disruption happening, and same thing is true even for the FMCG sector. Today, somebody sitting in a small town can build his own brand and create a niche and eat away into the market share of biggies who are less agile, less nimble, high overheads. Now that shift is happening. So as we are internally we debate is earlier we used to talk about unorganized to organized. Actually, this is happening from big to small. Because unorganized to organized, that's more or less gone with the GST and all those things. So that happened in last 5-7 years. But now these large biggies, are getting threatened, disrupted, potentially challenged by the smaller, nimble, agile player, innovative player who could kind of, and that's happening from, wider parts of the country. So even if, let's say, for example, a 200 crore beauty brand gets created in 10 cities,
Yeah.
is taking away 2,000 crore market share.
Right.
It's obviously eating into somebody's
Correct.
market share, right? So that is getting ignored. And the narrative created by the biggies is consumption is slow. They are not going to say that we are losing market share on their investor calls. They will only blame consumption is slow. But actually consumption is not slow. Consumption is getting
Chipped away.
It's getting to different directions. Earlier people would spend, today a cold play happens, aviation, all those are going very well, right?
Right.
This is consumption. Now maybe it is eating into some other
Also, the
pie.
consumer basket itself
Changing.
is changing.
Absolutely.
True that. Anything else in terms of sectors that you are bullish on?
I think we
You
pretty
said
much
hospitals. You said hospitals.
pretty
and
much covered. I
diamond.
think see, look again. There are always something. Then it goes down to identifying the companies and within IT also, like product based companies where there's a bit of a non-linearity. So India is actually, if you ask me, I'm super bullish on India because there's so much to do, so much entrepreneurship is happening.
But as you also rightly pointed out, I mean, valuations not everywhere is comforting, right? Like consumer discretionary is a fantastic structural story, but from a stock market perspective, you don't see that opportunity. One question that everybody wants to know is, is the worst of FII selling over? Is that a thing of the past? And also in the context of this global realignment, now we know that, India is in some kind of a privileged position. At least we are not in a bad position. Is this a turning point, you think, in terms of how foreign investors start to look India, whether institutions will start buying?
So first of all, we must understand this question, a very common question I get. And, see, today India is part of emerging market basket. India
Right.
is not an asset class as a investment asset class,
Correct.
right? Despite being the best market in the world, it's not attracting the flow because it's part of emerging asset market. Now look at what is the framework or what is the sort of practice of emerging market. Whenever US raises interest rates, they pull out money from the emerging market because most emerging market run current account deficit and they import inflation, interest rate goes up, their equity does badly. So whenever Fed start raising rate, they pull out money from equity market, which is what happened
Right.
post pandemic. We lost a lot of money because they were pulling money out, so did India. In between, India lost less money because India was overweight, China was underweight.
Right.
But as the rate peaked last year, in fact, there was one rate cut happened that month, India saw positive flow. But also a little bit of readjustment happened because of China became equal weight and China weight shifted back. So India got that outflow, which was inflow earlier or less outflow earlier. So that is now over, right? So in my opinion, having peak interest rates having peaked, you will not see further outflow. The day interest rates environment start becoming soft or start coming down, India will receive massive outflow, massive inflow. According to me, today foreign institutional investors are significantly underweight in India. See, I can take a 10-year view. If India is 3.5% of the GDP or 3.8% of GDP, global GDP, their investment should be, if not more, at least that much in their portfolio, right? Today they are around 1.5, 1.6%. So significantly underweight. There will be a time, according to me, all of them will wake up. And take the example this from a Japanese experience. See, 1965 to 1989 was a Japanese economic miracle. It was a big boom of Japanese, boom which we all heard. And, in that period, markets went up significantly, I think 25 or 30 times. The peak of the market in 1989, Nikkei, the Japan, which is a small country, was as a percentage of total world market cap 43%. And Nikkei traded at almost 60p. But if you look at the foreign flow in that, majority of the flow, because earlier Japan was part of Asia, came only in late 70s and early 80s or mid 80s. And if you remember, they coined a term called Asia ex-Japan.
Right.
Because then Japan became a separate asset class.
Correct.
Because how do you allocate large capital to a very promising market?
Right.
I do see a situation or time, whether it will happen 2 or 3 or 5, I have no idea, where India will become a separate asset class, just like Asia ex-Japan, India will be ex-EM. Because there is no emerging market which offers profile of India. We are, domestic consumption story, we are domestic, manufacturing story, we are export story, we have lots, services story, so there's nothing common. So hence, if you see emerging market as a basket has not delivered return.
Right.
If you take 20-year history, it's not delivered return.
Right.
Because one day China will go down, one day India will go down, one day Brazil will go down. So the basket, you don't make money. Then why should you invest into a basket which you have no idea whether you will make money or not? So that concept is also becoming weak.
Media talked about it. I think FT carried quite a few pieces saying that global investors are looking at Asia ex-China. Ex-Japan,
what is Asia
ex-China.
So
India.
India. What is Asia ex-China? Meaning
but
other meaning.
There are others also, right? Like there is Brazil, which attracts
Brazil
a lot
is
of
not Asia,
flows.
right? So Asia ex-China.
Is largely
India.
Korea,
you have
Korea,
Indonesia.
India.
They're all tiny markets, right? So I'm saying, I don't know whether it is Asia ex China ex whatever.
Yeah.
I know that there will be some concept will work out. See, as I have a very big concept, people have talked about many times when the tax rate changes happen, this and that. I say, boss, as long as there's a honey, bees will come.
Right.
As long as we have a good economic stories will come, investors will come. We have to just maintain our pace, momentum. I am so glad that today our domestic investors are getting to participate, and some point in time others will get expensive. Historically, it has always happened other way around. And thanks to our SEBI, thanks to mutual fund industry, campaign run by AMFI, that lot of retail participation have participated in this India economic miracle over last 10 years and participating. None of the investors or the SIP flow did not stop in this fall. That tells you that what kind of juggernaut we have got created, and I think it's the next 10 years are superb.
Sure. On that note, thank you so much for joining me today, Vikas. It was wonderful talking to you.
Super. Always great chatting with you.